Hi, my name is Joe Park, and I'm CEO of Horizon Stewardship. Welcome to a short recording today on the current state of PPP loan forgiveness, 8 updates from the SBA. I have with me today Stan Reiff. Stan is a partner at CapinCrouse accounting and audit firm. They are the largest accounting and audit firm in the United States that deals exclusively with churches and nonprofits. Stan, I love having you here. Welcome.
Thank you, Joe. Always a pleasure to spend time with you talking about these topics.
A couple of weeks ago, I would have said we were done with this. I didn't imagine the need to make additional recordings or webinars or updates, but the PPP, or excuse me, the SBA had some other things in mind. Tell us what's been going on.
So, Joe, certainly you and I did talk about this. We thought, let's move on to the next topic that we can serve churches with. But indeed, there have been quite a few changes. So specifically, we're all aware that on June 3rd, Congress passed the House passed legislation around the extension of the time frame, the covered period. A few other provisions that we will be talking about today. On the 5th, it became law, and again, consistent with everything we've been talking about, and the reason for another update is by the 8th, we're already making more changes and more clarifications to the bill that was passed on the 3rd, became law on the 5th, and by the 8th, we're making changes. Since then, there have been more changes that we're needing to make sure we're communicating consistently, because indeed it is better, but there are some potential gotchas if you're not aware, and we want to make sure, Joe, that the churches and leaders that are listening to this are fully aware and get all the information they need as they start applying for their loan forgiveness with their lender. The first key update that we want to talk about is that the minimum loan maturity has an extension. And so we've gone from 2 years to 5 years, and that's for all loans who receive their funding on or after June 5th. Now, the great news is if you got your PPP loan before that, by mutual agreement, you and your lender can agree to, again, take this additional step and get the 5-year minimum maturity if you need it. Now, again, this is great news if you need it, and if you don't get all of your loan forgiven, you now have a longer period of time to get that paid back. Again, the provisions on the 3rd that went into law on the 5th extended the loan program from June 30th to December 31st. And so, but then they had to come back on the 8th and confirm, no, the funding actually ends on June 30th. Next key updates has been that, we've talked for several weeks now about it being a 56-day, 8-week, not a 2-month, not any other variation. It was 56 days, 8 weeks. Well, now with this provision, we now have 24 weeks as a covered period. And so there's several issues that play into this that I think is really important. Number one is if you got your your loan funding on June 5th or after, it will be that 24-week period. If you got the funding before then, you can elect to keep the 8-week period, or you can go with the 24-week period. Now, you can apply for your loan forgiveness in between that time set. So think of it in terms of 8 weeks as your threshold for those who receive their funding before June 5th, and 24 weeks is the ceiling, the most amount. So somewhere in between that time frame, for those receiving their funding before June 5th, is that time period. If you receive your funding after June 5th, you only have that 24-week period as the covered period. Now, what happens next is people ask the question, can we apply for a loan forgiveness before 24 weeks is up if we have indeed expended all of those funds? And the answer is yes, you can. So within that, though, there are potentially some gotchas that the Journal of Accountancy has done a great job on this article talking about if you've had more than a 25% reduction in your compensation for employees, and specifically that would be a payroll cut to your employees, more than 25%, the difference between 25% and the amount of that reduction will trigger some potential lack or loss of loan forgiveness that will be attributed to the entire 24-week period. And so, for example, if there is someone that you're paying $1,000 a week, and then you reduce their salary to $700 a week as part of your mitigating, your cash consumption during this period. Well, then, and if you go to apply early for your loan forgiveness, the calculation is that the first $250,000 is exempt from the calculation. So now we're looking at the $50. So you were paying $1,000, you drop the person to $700. The first $250 we take off the table. That leaves $50 a week times the full 24 weeks. Now it's $1,200 per employee that the loan forgiveness will not be applied to. And so depending on how many employees you have, that $1,200 in that particular example starts adding up. So that's a potential gotcha in applying early if you don't have a chance to close that gap or otherwise. Now, if you have not had that kind of a salary reduction, that may not apply to you. Another area has been, we've talked about the FTE calculation. And so there's that calculation that still plays in, but there's an alternative one that you may want to consider if that's another issue. A third component you want to look at has been they have changed the timing to better accommodate seasonal employees. And for many of us on this call, that could be if you have a preschool, if you have a conference center, if you have camping, or any kind of other youth activities that youth camps that are being severely impacted by what you would normally be doing late spring, early summer, midsummer, and because of other either shelter-in-place guidelines or other kinds of restrictions that have been imposed has affected that. There are a variety of provisions to safeguard you or provide that safe haven, but there are other calculations you'll want to look at, certainly within a preschool environment. There's provisions within the interim rules that talk also about the lack of availability of employees to come back, et cetera, which aren't fully defined. But there's a 34-page article within, I'm sorry, not an article, but the 34-page interim final rule from the SBA that talks about this. So it's become some clarity, but a lot more technical and a lot more complex at the same time.
So Stan, there's a lot of good news here. The new act has allowed from 56 days to 24 weeks or December 31st, whichever comes first for the borrower. But there's a lot of complications to it. You all are offering a service to help churches and nonprofits properly complete their applications. What I understand is that for most of our listeners today, the fee to do that would be somewhere between $500 and $1,500 for your guidance on that, if they're not already a CapinCrouse client. Is that correct?
That is correct, Joe. Again, there's so much nuance, and it's become so technical. We literally have various calculators that we're using to be able to formulate what's the right approach to maximize the forgiveness. Again, we can't guarantee forgiveness of all the dollars for every client, but we're certainly looking at what are the best options, what are the best calculations, which are the best alternatives, given your unique circumstances of were there any payroll reductions, were there any FTE reductions, did you take advantage of any of the family leave, extended care, where any of your employees took time off to take care of family because of daycare issues or illness. There's so many different calculations, including even the payroll tax credits that extend into 2021 and 2022. All those things have to take into play along with the changes that have come out just this month. And so again, a lot more options, but a lot more calculations that need to be vetted to ensure that you've maximized the forgiveness provisions available.
So for the listeners out there, I'm pleased to tell you there is an easy button, some insurance against a mistake that you might make that CapinCrouse is offering. You can certainly ask for this same service from other CPAs. I would encourage you, though, to make sure that the CPA that you are asking this information from or assistance with completing your application has a lot of experience with church or nonprofit. If they don't, we know that CapinCrouse is available for you, and they are the largest in the United States that specialize just on this kind of work. Let's move on to the next of the provisions.
So, Joe, consistent with the topic we just talked about, as far as salary reductions and the FTE reductions and all the other tax nuance. One of the other good news items is that there is an extension for rehiring the workers or employees. If you'll recall, we spent the last several weeks again saying you've got to get everybody back on the hire by June 30th. Well, that's been extended to December 31. And so again, consistent with what we just talked about, because of this, that date is now shifted to December 31. And if you've got some changes in there and you apply early for that forgiveness and there's some negative impact, you want to make sure you're mitigating that. But again, that's good news. That gives you more time. Certainly if you're a preschool or a K-12 school, to get all your teachers back fully employed as the school starts. Certainly, different states with different reopening guidelines are, indicating what schools will be able to open on time and in what fashion and how that'll affect workers. But again, there's also provisions that are delineated around if you're not able to fully employ everybody because of different kinds of restrictions or guidance from government agencies. Those will be not held against you, but there are forms that need to be filled out, calculations that need to be fulfilled to ensure that those are accounted for properly so they don't have a negative impact on your loan forgiveness. So the next key update has to do with the exemption and proportional reduction for loan forgiveness. And so there's two elements here. We've talked a lot about that. It used to be the 75% that had to be used for payroll. That threshold has been reduced to 60%. The wording was such that there's a lot of ambiguity and concern that it was either hit the 60% or not have the loan forgiven. There's been further guidance and instruction that says, no, it is still prorated. They've just lowered that threshold from 75% to 60%. The other piece has to do with the FTE equivalents. We've talked a little bit about that already in some of the other slides. But again, there's provision that says if you're not able to fully open because of government guidance and restriction, you're not able to hire the qualified staff that you need, and so there's vacancies. Several other technical provisions like that. There are ways to offset that reduction in the FTE calculation as well, so that you're not penalized, and it will enhance and help you maximize the amount of that loan forgiveness without those penalties. So again, very important that you work with your CPA to account for those and make sure that your CPA understands your church setting, your camp conference setting, your education, your preschool setting, especially from a non-profit and religious environment category.
All right, back to that 75 and 65. We spent a lot of time worrying on this. The reduction came out and it changed again.
Correct. And again, we just talked about that in the previous slide. I got ahead of myself, but again, it is that 60% threshold. And there is clarification that, to maximize it, you need to be at 60%, but it will be prorated. So,
which is great news.
That it is.
What about the extension of the loan deferral period?
So this is an interesting clarification and extension. So, it used to be we had X amount of days. I think it was 30 days to apply, and then the lender had 60 days, and then the SBA had 60 days, I believe it was. Well, now, we're talking about, because of all this extension of time going to 24 weeks, they're now saying that, the borrower needs to apply within 10 months of the last day of the covered period. That's what they're in the CARES Act section 1106. And then you have to start making your payments of principal, interest, and fees. Well, hopefully everybody's going to be done with maximizing that loan. Having spent all the dollars, you will have applied long before that period. And my hope and prayer for each person listening is that they will have actually gotten this closed, that they'll have record from the SBA that the amount of their forgiveness. And again, we hope and pray that nobody has to repay any of that loan if it's done appropriately, especially with all the additional concessions that have been made.
Deferring of the payroll taxes.
So here's an interesting one that certainly really affects a lot of for-profit companies from a taxation issue, but not-for-profits can maximize this from a cash flow perspective as well. So here's the key piece: is it permits recipients of the PPP loan who are deferring the payment of payroll taxes, which is part of those provisions early on back in February-March timeframe. So it allows the employer that qualifies to take 50% of those payments and push them out into the new calendar year of 2021, and the other 50% will not be due until 2022. So it gives you really another 2 years to pay those payroll taxes, the credits that you received, push those out another couple of years from a cash flow perspective. You'll still have the liability, you'll still need to book it, but so you don't forget it, but it's just allows you to push those into hopefully future years where we're past COVID and we're looking at that in the rearview mirror.
So Stan, you guys are also great aggregators of information because you work with so many churches, you connect so many churches. Your surveys provide incredible insight as to what's going on in other churches. These surveys allow those who may be consulting with you to look at benchmarks of what's happening with other churches and to compare yourself and your practices to what is happening in churches of your size around the country. I know you guys have got another one planned for the summer. I look forward to unpacking that with you in webinars and recordings. It's an incredibly invaluable service you guys do. Thank you for that. Some additional resources for you. This video is going to be available in giving365.com. That's Horizon's online resource library. It's full of all kinds of hundreds of other resources related to generosity, but there is specifically a section in there that is on COVID-19 resources. That's where you will find this recording. In addition to this, you'll find a resource called Unpacking PPP Flexibility Act. Each one of these points is described in further detail in that resource, along with the data points that the SBA is going to be using to disclose about your church. One of the things the SBA has agreed to do as part of the transparency of the process is to disclose specific application details about your church. If your loan was $150,000 or greater. If it's under $150,000, those are going to be aggregated. But if you're listening to this and your loan is $150,000 or greater, your application details are going to be published for anybody to view. Also, we have horizons.net. There's a tab at the top of the page that you can click on for curated COVID-19 resources. These are PPP loans. These are other COVID-19 related resources that we are curating from the net. I want to remind everybody of the CapinCrouse PPP loan forgiveness application service. Depending on the size of your church, the loan fee could be, or the application assistance could be anywhere from $500 to $1,500, generally based on the size of your organization. And then about our upcoming webinar that we have, completing the PPP loan forgiveness application, which we are putting on with CapinCrouse on July 21st at 10 a.m. You can sign up for that in our Resilient Leadership series that we send out each week. If you are not receiving that and you go to Giving365 and sign up for that free resource, it will automatically put you on our weekly mailing list for Resilient Leadership. The reason that we have that July 21st is there are a number of updates that could still happen. We wanted to set those set that date out as far as possible to get into the gritty details of filling out that loan application. My particular lender has not even put out their version of the application, and several other lenders haven't. So that's part of why we're waiting. But this particular webinar is going to be primarily a question and answer session. So if you are looking for a specific question that you'd like to get answered, this webinar is for you. So that's the latest information we have right now. Stan, thank you for your service to the church. I want to remind people that not only are you a CPA, you are a pastor who your calling is to help churches and nonprofit organizations maximize the stewardship of the resources that God has entrusted them with. Thank you so much for your service to the church and the folks who gather information through Horizon Stewardship.
Joe, thank you again for the opportunity to interview with you and to share these resources with the churches that you serve at Horizon Stewardship.
Well, I look forward to seeing you on July 21st.
Sounds great, Joe. Talk to you soon.